Hey, Jason Sirois, Compass, Colorado. This is How's the Market Denver. Today is June 30th, 2022. I'm getting this market update video out to you just a little bit later than usual. This has been a jam-packed month, lots of action in Denver. First and foremost, congratulations to the Colorado Avalanche. That was a super fun series, and the Cup is in Denver, and that is awesome. That was a lot of fun to watch. The weather's amazing. I hope you're making time to spend a little bit of time outside, in the city, in the mountains. Our patio dining scene is buzzing, and concert season is in full swing. There's just a lot of fun things going on. Huge shout out to Third Eye Blind and Taking Back Sunday for bringing it Monday of this week. That was one of the best shows I've ever seen at Red Rocks, no joke. Super fun throwback. It was like a sing-along. Let's talk about residential real estate. There's a few things on everyone's mind if you're paying attention to any of the headlines at all, and that is inflation, that is interest rates. This is a cooling market, rents increasing. There's a lot of media headlines that are doing a fantastic job of stealing our attention with these emotion-inducing headlines that don't always paint the full picture. Some of the narratives are positive and others are quite grim, but we all know that these headlines definitely don't give us the full scope of what's happening. So I want to dive into a couple of those items. Right away, let's start off with inflation. It's up. It is way up. So 8.6% inflation year to date or year over year. That's the highest it's been in 40 years. And at the end of the day, we're all feeling it. We're feeling it at the gas pump. We're feeling it in just groceries. We're feeling it everywhere. It's just expensive to live right now. And I don't know if you've had the chance to, book any flights or any hotels anytime in the recent few weeks, but it certainly feels like a lot more than 8% increase from a year ago from now. It's just expensive out there. Mortgage rates are hovering around 6% right now. And so what that means, if you were to buy a $1 million home with 10% down, your monthly payment would be about $6,000 today. Now compare that to last year in a 3.5% mortgage rate environment, your payment would be about $4,660. That's a $1,350 difference. That's real money. That's a big increase from last year at this time. So affordability is getting squeezed. We're gonna dive into that a little bit. So how has all of this shifting in our economic environment affected real estate? So to answer that, I wanna get on the same page about basic supply and demand economics for a second, not specific to real estate. So as interest rates go up, making money more expensive, demand for products is supposed to come down. And the Fed is raising interest rates intentionally to slow down the rate of inflation, the rate of spending. We have too much money chasing too few goods and services in the marketplace. As the money becomes more and more expensive and that demand starts to come down and come closer to the supply levels, that's when we have what is more considered balance. Now that's an oversimplification, and I realize there's many factors at play here, but it's gonna be relevant as we tie this into real estate. So in the Denver area at the end of May, the average listing count for the last 37 years, 1985 to 2021, is 15,199 homes active on the market. We ended the month of May of this year with 3,652. So when you read that headline that says 76% increase in inventory, are we heading for a real estate crash? It's really important to understand where was the metric prior to that 76% pop. And I can tell you right now that it was the lowest it's ever been at 2,075 listings in May of 2021. So it's all about relative. What is the vantage point that 76% jump is coming from? Now, since we are only 11,547 homes shy of our 37-year average, that means that we have a lot of ground to make up on the supply side in order to create a balanced market. So what I predict we're likely to see is a steady but much slower rate of appreciation back towards normal, because let's face it, 18+% appreciation year over year is just simply not sustainable. It's just not possible for homes to continue to appreciate at that clip in order for anybody to be able to afford homes. Now, I also expect to see the sales volume, which is the number of homes selling in any given month to start to decrease now that the buyer pool is cooling down. Now, to those of you who are renting and on the fence about whether you want to jump into the home ownership market or not, I want you to consider the following. Affordability in housing is an issue right now because one, homes have rapidly increased in value over the last couple of years, and two, it's more expensive to borrow money. So as a result, many other would-be home buyers have been forced to continue renting. Now, newsflash, the rental inventory has not seen an increase to accommodate this higher demand. So just like we've been talking about all along, higher demand, low supply, what happens? Your rents go up. And unless you're renting from a parent or from a homie who's giving you the super friend discount, chances are your rent is going up, and newsflash, you have no control over that. That sucks. So rents are high and they're poised to go higher. And for this reason, I believe now is a great time to buy if you can weather the current interest rate environment. The 30-year fixed rate mortgage is also known as the inflation buster. It's a buzzy word right now. And the reason for that is if you have a fixed rate mortgage, your housing costs remain the same despite what the world is doing or what economies are doing. So unlike renting in Colorado where there's no rent control, your rent could go up for any amount and there's nothing you can do about it. You have no control over your housing expense. For those of you that are cash heavy at the moment, keep your eye on investment opportunities. Increasing rents means more opportunity for cash flow, especially now that cash is earning a little bit more strength in the marketplace, returning to its king status. Now, the reason I say that is over the past couple of years, lenders have gotten quite savvy and many finance buyers, I had many myself, were beating cash offers because the terms of those offers were just as competitive. But now that we're seeing fewer offers with appraisal gap coverage or waiving inspection, we're seeing some of the buyer terms soften, so your power of that cash is actually increasing in this market. All right, getting a quick look at the numbers around Metro Denver. Single family market, we have 5.4 fewer homes sold year to date than the same amount of time last year. Our median close price in the detached market is down 1.4%, down to $670,000, with the average close price down almost 2%, $805,508. Median days in the MLS, both in the attached market and the detached market, is still 4. That is still super, super fast. I think it's been 4 days as a median for the last 6 months. It's been quite some time. And on that note, I do expect the July numbers reflecting June's data to show that we have a higher median days in the MLS. We have seen quite a stalling, more days on the market as of lately. Moving on, we are seeing a lot of price reductions. A lot of sellers are getting creative and offering to buy down buyers' loan points in order to make the loan more attainable. So if you get pre-qualified for a 6.0 interest rate, but that mortgage is just really not doable for your financial situation, a seller can come in and say, hey, I'm going to give you a concession, whatever that amount is, you buy down the rate and your mortgage is more palatable. That we're seeing a lot of that right now. It should be noted that the cherry homes, the ones that are just in pristine condition, they are still going under contract very quickly, and they are still setting peak prices. So beware of that. You know, we mentioned this earlier, we're seeing a lot more inventory than we had last year, sure, which was the record low, but we are far, far below, in fact, over 11,000 below our 37-year average. Sellers, you've got to do the work. Clean up your place, stage it, paint it, clean it up, organize it, make it look awesome. Don't give buyers any reason to say, you know what, yeah, but your competition down the road, it's a little bit fresher, not have to do as much work. Do that work up front and you will reap the benefits, I promise you that. Buyers and investors, I really believe there's a lot of opportunity out there right now, so stay tuned, keep studying the market, and look for opportunities because they will continue to show themselves. So that's all I got for you this month, you guys. Hey, thank you for tuning in. If you have any thoughts about buying or selling real estate, or you just want to talk about the market, I'd love to get in touch with you. Give me a buzz anytime. Be well, stay smart. Hey, we'll talk to you next time.